Welcome to another S&P 500 analysis. Today is May 14, 2023. Last week, we got the latest report on inflation, the CPI report, and also the Producer Price Index, the PPI. And those reports were supposed to create some volatility for the market, but as it turned out, it generated the smallest or the narrowest range for the S&P 500 since November of 2021. Now, don't let this calmness fool you, because this balance between buyer and seller will lead to imbalance of either buyers or sellers. So in this video, we're going to take a look at the market sentiment and the internals along with the price action of the indexes, see how they perform. And also we'll take a look at the 10-year yield, the US dollar, oil, gold. In addition, we'll take a look at the SPY, QQQ, IWM, and a couple of the FAANG stocks that have been holding up the S&P 500 and see will they continue to push the S&P 500 higher, or will they start coming down and start dragging the S&P 500 lower. Here's how the indexes did last week. With the Nasdaq 100, the top performer gained 0.61% or gained 81 points. While the Dow Jones Transportation was the worst performer, it lost 2.41% or 339 points, almost 340 points. The S&P 500 lost 0.3%, 12 points or so, and the Dow Jones Industrial lost 1.1% or 373 points, with the Russell 2000 lost just a little bit over 1% or 19 points. For year to date, the Nasdaq 100 is still holding up near a 22% gain, while the Russell 2000 is losing 1.16%, with the S&P 500 holding a close to 7.5% gain, while the Dow Jones Industrial only holding up almost 0.5% gain. And looking at the weekly chart of the S&P 500, the range is only about 55 points, and it lost 0.29% or 12 points for the week. So basically, this is what we call a NR7 type of candle, because it's the narrowest range within the last 7 candle or 7 bars. And it's still close above this 10-week and also the 40-week moving average, and hovering around this top edge of this almost a year of trading range between the 4,200 level and the 3,500 level here. So we are looking for this to break out either on the upside or toward the downside and retrace back down to test the October low, or come up and take out the 4,200 level and push us up, possibly get up above this pivot high here near the 4,600 level. And looking at this sentiment chart, it kind of tells us that the market participants are not fearful right now, because the VIX is sitting below this 20 level since late March, and it is hovering around the 17 level right now. And right now, also, they are not all risk on, because it is still, the put call ratio is within this 1 and 0.7 zone, which we call it a sort of a hedge zone. Because once you get down to the below 0.75 and get to the 0.5 and 0.6, then we know the market participants are getting very bullish. And also when the put call ratio is above 1, then we know the market participants are getting bearish. The market participant is pretty much in a waiting game, just like what the S&P 500 index is showing due to the last month or so of this sideways action. And also looking at the internal, the up-down volume ratio did not do too much or show much of a bias on one side or the other. We see that the up-down volume ratio is pretty much hovering around plus or minus 1 or so, mostly on the negative side last week. But the strongest lean toward the negative was only 2-to-1 in favor of the down volume. Other than that, it was pretty much in the 1 range, the -1. And also you can see from the daily advanced decline, only on Thursday that we saw over 1,000 more declining issue than advancing issue. Otherwise, it's only a few hundred one side or the other. If you take a look at on Wednesday, there were a little bit over 400 more advancing stock than declining stock. But then you look on Tuesday, it was 500 or so more declining issue than advancing issue. So although the week overall, it seems to show a little bit of a bias toward the downside, In the same picture, we are seeing from the 52-week high versus 52-week low. You can see the number of stock making new 52-week low is not expanding. It's been pretty much kind of in this 100 level, while the number of stock that is making new 52-week high is in the 50s. So you see that also the difference between them is not that much throughout the week. Now, the main concern remains to be this cumulative AD line versus the S&P 500, primarily due to the negative divergence. We see that the advanced decline cumulative AD line is moving lower, while the S&P 500 is actually moving higher. Could be a beginning of this resolution process, because we are looking for the possibility of this coming down to this level here near the 3850 in order to resolve this negative divergence between the S&P 500 and the cumulative AD line from the New York Stock Exchange. And the picture is slightly different, only slightly, primarily due to the index. You see that the Nasdaq 100 is continue to push higher, and that is primarily due to some of those FAANG stock that is pushing higher. But if you look at the up-down volume ratio, it's similar picture as the New York Stock Exchange. It is pretty much flatlining, hovering between plus or minus 1 and plus or minus 2. This area is nothing dramatic. It is leaning one side or the other. Likewise, on the daily advanced decline, we also are not seeing too much of on the negative side or on the positive side. Although overall the week tend to have a little bit more bias to the negative side, but this is not a big type of a sell-off that cause fear in the market. And similar picture in the new 52-week low versus 52-week high. We are not seeing any sort of expansion on the number of stock making new 52-week low, and also not seeing an expansion on the number of stock making new 52-week high. But again, the main concern is the cumulative AD line. It is much more situation than the in the New York Stock Exchange. You see this negative divergence, and you see the Nasdaq 100 is just pushing higher and higher, while this AD line is pushing lower and lower. You can see this right here is actually dipped below this low. In other words, this area here. And if it is going to resolve by coming down to this low, then that means we have quite a few points for the Nasdaq 100 to drop. The takeaway from the sentiment and the market internals are that market participants are not worried about a huge sell-off at this time, but they are not completely risk on. As a matter of fact, they are more in a hedge mode than in a risk mode. The weakness within the market internals and the multiple negative divergence between the cumulative AD line and the S&P 500 and also the Nasdaq 100 are still unresolved, and it is building pressure for a huge downward move in order to solve these divergences. And looking at the 10-year yield, we see the 10-year yield came up a little bit, but still it's pretty much inside of this range between 3.25 and 3.75. So we'll see will it be able to come back up and make this run at this 3.75%, or basically will come back down and test this 3.25%. So we expect the 10-year yield will most likely kind of chop around within this range here in the coming months. Last Friday, the US dollar got a nice bounce. When the seller pushes down to this close to this 102, the buyer step back in and push it back up to this 102.70 area. So we're going to be watching the US dollar, see would it be able to come up to this 103.20, or would it come back down and possibly retest this 180 area. Crude oil had a nice bounce a week ago. We saw a buyer came back in once it came down to this 64 location here, and it encountered some resistance last week up near this 73.70, 73.80 area. So right now we are looking for crude oil to possibly make another retracement, come down and see what it hold this low here, because that's where we saw buyer came back, where it came back up and pushes up. So if it dips below this low here, somewhere around 67.75 area, then look for a possibility of come back down to test this 64.40 or try to test this low. And for silver, silver can counter some resistance on this trend line here, this descending trend line. And we're saying that we're watching for the price to pull back into this balance area here. So right now it's sitting inside the middle of this balance area. We're going to monitor silver. Would it be able to contain itself inside of this area and then balance it and set up for another move upward? Or would it break below this balance area, which go below the 2350 area? Then we'd be watching silver possibly come back down and retest this 21 and change area here. And for gold, we saw gold kind of topping out a little bit recently at this 2080 plus location. And right now it's pulling back, and we're looking for a pullback, possibly come back down to this 1984 area and see would it be able to find support in this 1984 area. And if it doesn't, then we're looking at this trend line here, and that would be in the area of 1950. You see, would it be able to hold 1950 and get a bounce back up? And if it doesn't, and it break this trend line, then we are looking at this pivot high here, this little W pivot high breakout somewhere around 1880, 1882 location. Now, if gold could find a bounce from this 1980 location, then we are looking for the pivot high to get retested. Then if it break that pivot high, this get above this 2085 level, then we are looking at this pivot high here at 2150 area. Let's take a look at the price action here for the S&P 500. On this weekly chart here, I highlighted three areas where it tried to get above this 4200. And you see the last couple of weeks, it's been trying to get above this 4200 again and got rejected. And also when it come down to this 4050 area, the buyer came back in and pushed it up. Once it get close to that 4200 level, then the seller also start pushing it back down. Now you notice there is this inside bar here, this NR7, and we are looking at this NR7 to get a little bit of an inside bar breakout. So if we could take out this high next week, then we'd be looking at the possibility of moving above the 4200 and possibly come up and take out this particular high here at this level of 4325. Now, if it do a inside bar breakdown, then we'd be watching for it to move down to this lower range of the expected move for the week, which will be between 4070 and 4037. So we're looking at taking out this low, and we'll be watching it come down and possibly fill in some of these gaps here. And here on this daily chart, we see these gaps that will be in play if the price come in to this lower range of the expected move next week, because we're watching for these low to get taken out. So once again, we'll see would it be able to come up and take out this 4190. Basically, that's what the market is pricing in, somewhere around that 4180, 4190 area. So it's not even pricing in for a 4200 level next week, but that doesn't mean that it could not go into that 42 or get above that 4200 level. So watch this pivot high here. And if it contains inside of this range here, then look for it to come back down to this 4070 level. And here looking at the Nasdaq 100 daily chart here, you see that it came up and tagged this 0.786, essentially that 80% move of this symmetry move or this bull flag. So for the coming week, the upper range of the expected move is somewhere around 13,678. And then the lower range is somewhere around 13,100 and 13,060. So what we could see is the possibility of this moving up and break above this 80% and try to get toward this 100% major move. And it will come up to this 13,600 area for the coming week or for the upper range move. And if it is unable to get above this 80% move here for the coming week, then look for it to pull back and dip below this 13,200 area, this zone here, and come into this lower range between 13,100 and 13,060. Now, in the coming weeks, if it come back down and get back into this range here and take out this low here, this low is somewhere around 12,724. And if it break this trend line, then look for this gap to completely get filled and work itself back down to this 12,000 area. And looking at the Russell 2000, you see the Russell 2000 was trying to get back up to this 1780 level. and was rejected and came back down. Now it seems like it's coming back down to fill this gap here. So I wouldn't be surprised to see the Russell 2000 continue to move down and come back down to this 1700 area. The Dow Jones Transportation also got rejected and forming a lower high. Now it's rolling back down, and we'll be watching this level here, somewhere around 13,500 area, and see will it take out this low here, which is somewhere around 13,400. And if it does, then we'd be looking at the possibility of retracing down to the lower edge of this trading range, and that would be somewhere around 12,700. And the Dow Jones Industrial is also rolling over once again, and we'd be watching this low here at 32,937. If it take out this low, then we'd be looking at the possibility to come back down to test these low down near the 31,700 area. Now, if we could push back up, then you've got this trend line to contend with and see would it be able to get back up above this trend line, also take out this pivot high on this reversal candle here. And the New York Stock Exchange Composite Index is also unable to get much headway into a higher level. So right now it is pulling back once again. And we're watching for the composite to come back down, dip below the 15,000 area, and come back into this zone, test at this 14,880 area. Now let's take a look at the ETF, the SPY here. We're looking at the SPY, the expected move for next week. The upper range is somewhere around 417, and the lower range is somewhere between 406 and 403. You see, I have a descending trend line coming down, and it seems to be butting against this trend line here. And also we have a composite point of control. So for the coming week, we'll be looking to see will it be able to break above this trend line and get back above this pivot high here, or this shooting star here, this reversal candle at 417.62, and get above this upper range of the expected move. Now, if it unable to break and stay above this trend line, I'm looking for the price to dip below the composite point of control and get into this lower range of the expected move down here, 406 and 403, and that would take out this low here. This low is somewhere around 408.64. Then we can see these gap will be in play. And once these gaps are filled, then we are looking at this trend line down here to see will this trend line provide any sort of a support. And looking at the QQQ, we see the QQQ came up just like the cash index, tagged the 80%, pretty much at 80% of the major move of this symmetry move or this bull flag here. And we are watching to see will it be able to get up to this upper range of the expected move up near at 331 area, and possibly move up to this 339, this 100% major move. Now, if it is unable to get above this 80%, then we're looking for this thing to come back down to this composite point of control, which is in confluence with the lower range of the expected move between 319.80 and 317. And that could also bring it down to positive, work itself down to test this trend line here, which is also try to test this pivot low here, somewhere around 309.86 or 309.89. And looking at the IWM, now let me bring your attention to the upper range of the weekly expected move. And it's going to be between 176.90 and 176.40, so it's around 177. And the lower range is between 169 and 167.5. Right now, it's sitting right at this composite point of control, and we're looking for the Russell 2000 to continue to come down and break out of this range here and dip into this 170 areas to the lower range of the weekly expected move between this 169 and 167 for the coming week. Now, let's take a look at some of the FAANG stock that have been influencing the SP 500. One of them is Tesla. And recently, Tesla did not do too much to elevate the S&P 500, but it did offer a hand to help hold it up when the other FAANG stock is trying to push it down, push down the S&P 500 a little bit. But you can see that Tesla has been on a downtrend pretty much. You know, back here, if I zoom out, since the back here, since the November of 2021. So you can see that it's been on this major downtrend here. Now recently got a little bounce here, but we're still looking for a continuation of a downtrend for Tesla. And the upper range of the expected move for the coming week is somewhere between 182 and 176.80. And the lower range is somewhere between 159.20 and 156.90. Now look at this huge negative bearish candle here on Friday. So we could see a continuation of moving back down to the lower range of the expected move. So that certainly would not help the S&P 500 if Tesla come down. Now, if it pushes above this 182, then it could try to work its way back up to this 190, and who knows, it might even try to work toward back to up at this 200 level. But it's been pretty difficult for Tesla to break out of this downtrend here recently. So I wouldn't be surprised to see Tesla continue to put pressure on the S&P 500. Now, the story for Apple is different. Apple has been the main culprit that is pushing the S&P 500 higher. And the coming week, the upper expected range is the 176.90 and 176.40. And the lower expected range is 168.70 and 167. So although we got a little bit of a pullback on Friday, you see on Thursday, got a little bit of indecision here, have a little bit of a doji, have a hangman, and we saw a little bit of a pullback. But once it gets down to this level here, the buyers step back in at 171 and pushed it back up. So next week, will it be able to continue to push higher and get up to this 176? And that would probably help the S&P 500 to get into the possibility of pushing up to that 4,200 level. Now, if it continues to come down, then look for this lower range to get tagged and also possibly come back in to this price channel, that the declining price channel or descending price channel that I have here, that I have drawn in. So if it come down to this lower range of the expected move, somewhere around this 168, then we could see that. And also there's this humongous earning gap that need to get filled. So eventually when this thing come down, then that's where we will see the S&P 500 to head lower. And the other stock that's been pushing the S&P 500 higher is Microsoft. Now, you haven't seen me talk much about Microsoft on my video, but I do cover it in my Substack page. So if you want to see my analysis on Microsoft, then go to my Substack page. The link is smtraderca.substack.com. And I do a weekly analysis of all these FAANG stock, and that's including Microsoft. Now, looking at Microsoft, the upper range of the expected move is between 315.90 and 314.90. And the lower range is somewhere between 303 and 340 cents. So again, it is sitting at this level here at 309.87. And last week, the market was trying to take it down, but you see the buyers stepped in when it gets down to this 306 level and pushes back up. So if Microsoft is continue to push higher next week and come up to this upper range of the 315.90 in conjunction with Apple, then will definitely help push the S&P 500 into the possibility of getting to that 4,200 level. And if it unable to get above this pivot high here, this high at 313 in the coming week, and start pulling back and take out these low here last week, last Friday and Thursday low, somewhere around that 306, then look for it to come back down into this lower range of the expected move at this 303 and 300 level, and possibly come into this zone here at 296. And that would definitely hold the S&P 500 lower. Now again, the S&P 500, the weight factor from Microsoft and Apple, these two stocks combined is have a weighting of 14% on the S&P 500. So you can see the influence that these two stocks have on the index. In summary, the S&P 500 put in the smallest range since November 2021. And the market participants are neither fearful or complacent. and the market internals are not showing any strong bias on either direction. This type of calmness in the market will eventually lead to some major directional move. And with the negative divergence between the AD line and the SP 500, and also with the Nasdaq 100, I will be watching for a possible major downside move to resolve the negative divergence. Be sure to smash the thumbs up to give it a like and help promote this video on YouTube. If you are new to this channel and would like to continue to watch these videos from me, click the subscribe. Thank you for watching.